Hi, everybody. Welcome to this week's Friday special edition of the Financial Thing peer-to-peer live stream. I'm looking at a different spot on the video camera now because I finally have gotten this new computer that I've been talking to you guys about for a while. So the webcam used to sit out here, and now it's sitting on top of a much bigger monitor. So not quite used to the positioning. I think maybe rising up the seat a little bit may help, but yeah, so for anybody that was here yesterday on Thursday instead of today, yes, I did send out an email about the change in time for the stream. It was kind of a last minute thing. Sometimes these things happen, but we'll get back to Thursday next week, hopefully. I don't know if Friday is a better day for people, or Thursday. I think Thursday would tend to be, since most people are out on a Friday. They're partying at the pub. Probably not, but anyway. So glad everybody's here. Nice to see everybody. Can't believe that it's already sort of first week of September's over. Some news this week, definitely a couple of things going on. We're going to chat about, as per usual, one of the more noticeable things that happened this week was I had about a 45-minute chat with Louis Schwartz over at Loanpad, who is the founder, owner, El Jefe, chief CAO, whatever you want to call him. So I just wanted to have a catch up with him and find out what's going on with the business, how things are over there, how they're dealing with COVID, and to talk about, obviously, the rate drops that they announced within the last couple of days, find out why and what's the thought process behind that. So yeah, I'll give you all of the findings on that. Nothing really surprising, definitely nothing bad. So what else? We're going to talk about what's going on with the rate cuts in general, and not only in peer-to-peer lending, but also within savings rates. Excuse me 1 second. And where do we go when saving rates are really low and they just don't look like they're going to move, and how does that affect us as investors in the long term and short term? Talk a little bit about assets capital this week, HNW lending, high net worth lending, what's going on with their situation, Grupeer, Ratesetter, a little bit of Growth Street news, some funding secure news, a bit of Zopa news, and the story that was posted on the peer-to-peer finance news about the FCA being urged to ban peer-to-peer access accounts. What my thoughts are on that. So I'm going to move you over to the left side of this screen. So yeah, so we have some good stuff to talk about this week within peer-to-peer. It's an interesting couple of days on the stock market too. If you're a stock market investor, you'll have seen some pretty good movement yesterday. And I'm just looking at what's going on today live. FTSE down 0.8%, SP down 1.15%, Dow down 0.8%. Seen some pretty big swings in some popular tech stocks. Apple dropping, Tesla dropping up a little bit today, but yeah, some were saying, is this the second correction of the stock market? Hard to know. I don't think so, but nothing would be surprising at this time and what's going on in the world economy. So we'll just give a quick shout out to everybody on the stream today. Hi, Chickaboy, you are first today. Aki Chap, your nemesis, is here. Thank you for the thumbs up. By the way, if you can hit the thumbs up right now, so you won't have to worry about it during the stream, and I won't have to nag you about it. So the thumbs up helps me with the algorithm on the YouTube search. So yeah, if you can do that, smash that button right now. Alan, hi in Basingstoke. We have Arthur Atchison. Thank you. Atchison. I think it's Atchison. Keith Morrison, Lincoln, up in the north of England. Hi in Paul in Kenilworth. I have no idea what that is, but I'm sure it's a lovely place. Hi, Dale. Dale Potter was here last night at this time. Again, my sincere apologies to you, but I did send out an email saying it was going to be rescheduled to Friday. And to be quite honest, I just wasn't ready to stream yesterday. I hadn't gotten as much information that I'd wanted to, so I decided to, under the advice of somebody very close to my heart, said, just postpone it. You can do it on Friday. It's no problem. So, yeah, that's what I did. Stephen, hi in Southport. Nice to see you. Martin, hi, you've been here since 7:30 p.m. yesterday. That is dedication. I certainly wouldn't expect for you to have been here since 7:30 yesterday. I don't think that is quite true, but that's very kind of you to say that. Hi, Peter in Leatherhead. Stephen in Nottingham, nice to see you. Hi, Dave. Dawson in Stoke-on-Trent. Alan says, looks fine. Lawrence, thank you very much. Good picture and sound quality. Yeah, so what I bought is this new iMac, and it has a camera inside of it, but it's not as good as the webcam that I use, so I was just trying to figure out that. Hi, Mike, pal. Nice to see you from the Action Group. And hi, ES. I believe you're still in Portugal, if I'm not wrong. Nice to see you here. Appreciate everybody coming. Hi, Chris Miller from Belfast in Northern Ireland, and Norman in very grey Sussex. Yeah. It's, you're talking about the weather now. You're coming into that awkward time in England with September, October, where things start to get a little bit cooler. It's still blazing hot here in Orlando, Florida, where my rear end will probably be staying for the rest of this year because my family has informed me that it wouldn't be a good idea to come back. Because apparently America is on some kind of blacklist for quarantine. So I'm just going to stay here for a while. Unfortunately, I'd love to be going back to London there's a lot of meetings I want to take with these peer-to-peer companies, but a lot of these companies are working from home right now and remotely. I know Louis at Loanpad told me that. So there's probably just not much reason to be away from the sunshine at the moment. Anyway, let us get to the good stuff today. And yesterday I had a very, very good phone call with Louis Schwartz from Loanpad. Oh, by the way, must do the quick disclaimer here for anybody that's not joined us before. This is a stream that is for informational purposes only. It's not intended to be financial advice, and the information has been prepared without taking your objectives, financial situation, or your needs into account. You should consider my information and its appropriateness for your circumstances. All investment carries risk, all investments, and opinions expressed in this stream are opinions based on my personal investment experiences, and they are purely opinions. Remember, the FSCS does not cover peer-to-peer lending, and your capital is at risk. And number one lesson that we learn in peer-to-peer lending and any investment is please don't invest more than you can afford to lose, because there is a possibility that you can lose money in peer-to-peer lending and any investment. So keep that in mind. And please, again, if you haven't joined the Financial Thing Facebook group, it is here, and put that in the link. Join us, it's free. And the Lendy Action Group too, by the way, if you haven't joined them or you want to join and see what's going on with the administration process with the Lendy disaster, Mike is here. He is very active in the Lendy Action Group, Mr. Mike Powell, and also Mark Mason, who usually joins us, is very prominent in the Funding Secure Action Group. Both of those are on Facebook. Definitely would join up and keep up on the news with them. So anyway, what's going on with Loanpad? Yeah, Louis told me, we had a great conversation about the business. Everything is really going as it should. Nothing has changed since COVID really began. Obviously, more caution has been put into effect with the economic situation, but because Loanpad's borrowers are very well known to them, they are continuing along as normal with their developments. They're still seeing that uptick in the increased lender pool. Usually they're seeing about 20 to 25 new investors come on board every week, which is a good thing right now. And one of the things that I asked him yesterday was, if you're a Loanpad investor, you can see the status of each loan on the right side. And I noticed that quite a few loans were extended and a few that were overdue. And what he told me too is, all of those loans are being handled appropriately. It's pretty normal for bridging loans to be extended. In fact, sometimes he's happy to see it when loans get extended because they can be too short sometimes. So yeah. Also, the FCA has regulations about how loans are classified, whether they're on time, extended, overdue. So they have to stick within those FCA regulations, the way that they classify loans, to time periods where they become overdue. It doesn't necessarily mean that the loan's in trouble, it just means that they're classified that way. They do have that one loan that is in default right now. It was deemed more appropriate for administration to handle that one loan, just to keep it on time and keep it moving in the right direction. Again, it's only a £150,000 loan, so it's definitely not going to really impact Loanpad's what is it, £12.2 million loan book. 150,000 is a very small percentage of that. We talked too about Brookdale, which is the new lending partner. I'm going to tell you about Brookdale. Yeah. So Louis has been working with Brookdale. Sorry, Blackvale. I totally butchered the lender name, borrower name. Blackvale. It's the Friday thing. The Friday stream is throwing me off because it feels like it should be Thursday today. Yeah, so Louis has been working with Blackvale. He's acted for them in the past on development legal work. So they're known to him. Not as large as HAMF by any means. We talk about HAMF has, I think, £100 million of lending of their own money, whereas Blackvale is nowhere as big as them. But they do have skin in the game, which is very important when it comes to peer-to-peer lending. One of the loans so the first Blackvale loan that Loanpad issued, Loanpad had a £650,000 stake in the lending, and Blackvale had £270,000. So you're seeing that skin in the game, which is very, very important. Blackvale has that, and Louis generally has very good relationships with these borrowers. He told me that they will be bringing more borrowers on board and continuing to do their lending with HAMF as that relationship's been well established. And as Loanpad's lender base increases, that's when you'll start to see more and more of these new lending partners come on board. But again, they're always lending partners that Loanpad has existing prior relationships with, which is great. I mean, relationships are everything, and I think that really is one of the big plus benefits to Loanpad, especially with their very first borrower, HAMF, that they do have that really good relationship with them. And then again, if you're just looking at pure safety, the loan to values are some of the lowest that you're going to find within peer-to-peer. Right now, about 27% loan to value. From a safety point, as far as that goes, you're probably just not going to find too many companies offering loan to values in that lower rate. So yeah, and hence the returns. I mean, we're talking about some of the lower returns in peer-to-peer lending, but again, if you're a peer-to-peer lender, you're not necessarily thinking returns are everything, because there's a lot of you out there, including me, that have been absolutely clobbered by high rate peer-to-peer lending. So safety obviously now becomes extreme high priority for most people, and that's what Loanpad is very, very much focused on, is providing a very, very safe loan book. So what are we talking about? The rate drops? Yeah. So we had an email, I believe it was yesterday, talking about rate cuts with Loanpad. We're going to have a 0.25% rate cut 1st of November, and an additional 0.25% drop on the 1st of December. So what that's going to mean, their classic account, which is, I don't want to use the word instant access because it could be misleading, but at the moment it is very, very liquid, and an access account that will drop from 3.5% per year to 3%. And then the premium account, which is the 60-day access, which will be dropping from 4.5% down to 4%. So we talked about, why that was happening. And it was sort of something that I already thought makes a lot of sense, which is we've got these extremely low base rates now that I expect are going to go completely flat. But right now, I think we're about 0.1% base rate. So what's happening is the borrowers are having to drop their rates to remain competitive. As interest rates drop, then borrowers have to drop their rates, and it becomes this pool of these lenders these borrowers are going after loans within a pool, and if their interest rates are 1% higher than their competitors, they're obviously going to lose those loans, and people like Hanf are going to try to compete for the best quality loans, and in turn they have to be able to adjust their interest rates as need be. That has a roll-on effect to Loanpad. Obviously, if Hanf are cutting their rates by 0.25%, whatever that is, or 0.5%, then Loanpad has to do the same, because they cannot offer the same rates when borrowers are paying or lending at less. So yeah, that's really what it's about. And I asked Louis, is this going to be a temporary thing? And he said, well, it just really depends on what happens with the economy. Right now we're at a low growth, low inflation stage. If that changes, likely changes wouldn't come into effect until next year. But yeah, and if interest rates go negative, I don't know if those rates in peer-to-peer lending are going to drop even more. But just remember that most of the time, the interest rates do reflect risk. And you just, as a peer-to-peer lender, you have to take the low interest sometimes to balance out a diversified portfolio of investments. You don't want all of your money in at a 9% peer-to-peer lending company, or you necessarily don't want all of your money at a 3% peer-to-peer lending company. What I've always tried to do is to balance, some high, some medium, more low, to try to get a return that maybe is in the 4 or 5% range at the moment, which, when interest rates are so low, it's not terrible, right? I think we've just been spoiled by better interest rates over the last few years, and now we're seeing them actually really drop. So you start to think about the past and like, man, I used to be able to get a secured savings bond for 5%, and now I have to take risk in peer-to-peer lending just to get 3, 4, or 5%. You just think, is it worth it? But the fact of the matter is, where do you go? I mean, this low interest rate environment is not going away anytime soon. So that's going to have a knock-on effect. So yeah, everything seems to be going exactly as planned at Loanpad. I'm feeling very comfortable, very happy with them. So again, I have a good relationship with Louis, so not too worried about it. See, assets capital. reports 4,000 trades on their QAA secondary market, that quick access account secondary market, worth 6 million plus pounds, and they say only 2% of investors are selling loans at a discount. I checked this morning. The discount was running at a whopping 10.2%. Exiting the access account and access capital is really just a preference thing, isn't it? If you believe that the assets business is secure and you like the company and you don't mind the loans, I think that selling out at a discount is probably a mistake. It's kind of like same thing when the stock market's dropping and you look at your shares falling, you think, shit, I got to sell. And then you watch it bounce back the next day and you think, crap. I don't think there's anything wrong with sitting on the sidelines. I've said that before, but I don't necessarily think running for the exits and taking a 10% haircut is necessarily the right thing to do. I'm certainly not doing that. I don't think there's anything wrong with withdrawing asset interest or capital when it gets repaid. But personally, I'm not going to sell at a 10% discount because I think assets is okay. SME business lending is tricky. I think those businesses are going to get hit, and it already have been hit through COVID. So it really depends on how comfortable you feel. And there's always a case for hedging your investment and saying, well, I'm going to take 15% of my investment and sell at a discount just to get some reduction in my investment through a company like assets. But again, depends how much you have invested and what your comfort level is. There is no prediction on futures of any of these peer-to-peer companies because we just don't know how long these economic conditions are going to last for. But I'm certainly not necessarily an advocate for running for the exits and taking a big haircut. But we'll see what happens. Again, we really don't know what's going on behind closed doors either. So hopefully I will have more information though as time goes on. But I also don't expect these peer-to-peer companies are going to be 100% transparent with me. I wouldn't have imagined that Funding Secure would come to me beforehand and say, yeah, Lawrence, just to let you know we're about to go out of business or that we're in trouble. They're just not going to do that. I've never heard anybody on this stream talk about high net worth lending, which is HNW lending. I don't know if anybody invests through them, but the FCA issued a regulatory restriction on them, stopping them from accepting new retail money and restricting their secondary market. I think right now the FCA is just really overly cautious about peer-to-peer lending companies, and especially ones that have asset classes that could be deemed as really high risk. HNW lending does sort of Funding Secure type investments like wine and cars, and I don't really know much about them. I've never been contacted them. I've never wanted to invest through them, but it seems like the hand of the FCA is putting a little, be careful warning finger in front of them, but I'm sure they'll be fine. I thought this was really interesting. So over in Latvia, we got this company called Grupeer that has had some problems. And so they've got this tax bill that they owe, and it's not even a huge amount of money for a corporate company. It's £201,000. The Latvian tax authority suspended their economic activities. So basically, they give me a slap on the wrist and saying, you better pay your taxes. And Grupeer, for some reason, hasn't paid its taxes and is having all these problems. They're not paying investors' interest. But what I found really interesting about Grupeer is that they announced that they'd hired a debt collection company to pursue loans. I don't know if that's particularly normal. I've never heard of a peer-to-peer company hiring, well, I shouldn't say I've never heard of it. It's rare for a peer-to-peer company to hire an outside debt collection company, because it makes me think, well, how experienced are you at underwriting loans if you don't know how to recover them? that's a big red flag warning sign to me. Are they in trouble? And then on their website, they have this little banner ad that says, we have vigilant debt recovery. Our priority is our investors' welfare. Thus, we are implementing reinforced debt collection policies and collaborating with each borrower to find the most viable solution for all parties. But you're not doing it yourself as a company. You're hiring an outside party to do that. It sounds very, very suspicious. So, Ratesetter news. If you're in the exit queue, you've probably seen a big jump this week. I was 286th position last week in excess. Check today, number 205. 5-year exit down to number 345, and I was 832 last week. So they've had a lot of liquidity movement this week, which is good news if you're looking to get out of Ratesetter. August, they were able to pay out 10 million in exits and 3.6 million pounds this week alone. So for anybody that's worried about Ratesetter, I don't think you have anything to worry about anymore. I think that it seems like they're doing exactly what they're supposed to be doing for investors, and I think they've handled things really well in the grand scheme of what's going on with the economic environment. So I'm really happy to see that movement, and I'm happy to see that movement in the investment exit queues. They also said that that their loan portfolio is benchmarking really well against a range of major UK lenders, including high street banks. So what they've done is put out a report. I haven't seen the report. I just read about it, but Ratesetter's loan book is performing well compared to other UK lenders on an unsecured loan portfolio, which again is really good news. The last thing you want to hear is that the loan book is performing terribly. Says Ratesetter's secured portfolio continues to perform in line with expectations, with increased sales in its residential property development segment. And that their asset finance facilities to car dealerships are performing well due to renewed underlying activity from consumers turning to the car over public transportation. Again, just my prediction for the future, I think that Ratesetter will eventually stop retail peer-to-peer lending completely. As far as having, investors like us being able to invest in loans, I think all of that money will come from Metro Bank in the future, and there just won't be any more Ratesetter peer-to-peer lending from a retail side, which is a shame because they will likely be doing what Zopa is doing, and they'll become institutional. So you'll probably see that the original big three, Funding Circle, Zopa, and Ratesetter, will not be peer-to-peer lenders on a retail front anymore. They'll just be lending companies. So it'll be kind of the end of an era and the beginning of a new era for the smaller, more independent companies that haven't grown as big as those other companies have. Yeah, kind of sad, really. I mean, yeah, gone are the days. Everything's changing. A little bit of Grove Street news. We've seen repayments in the last couple of days, which is good. I've read some of you on the Facebook group saying you've been repaid about 50% what you're owed. So you are seeing money starting to come in now. That's very positive news. I do believe Grove Street will do their very best to repay. Funding Secure had a loan that they're working on recovering. It's in the Wirral. Again, I talk about these loans because it's a good example of what you could face if a peer-to-peer company goes into administration, and also Funding Secure's poor job on their property valuations through their RIC surveyors. But this loan was a £552,000 loan valued at £916,000, and they were able to get an offer of $500,000 on it. So, yeah, you can see that they're recovered. Well, they haven't recovered. They got an offer of $500,000 on a valuation of $916,000. So you're talking about a pretty big drop on what the loan was valued at, which will result in capital losses likely for investors. By the time the administrator takes their money out, Funding Secure gets their little juicy cut, as they do on every loan that's recovered. I don't know how much of that is going to go away, but I'm thinking anywhere 15% maybe of that $500K after expenses. So you may recover 400 to 425,000 of the loan. So that would result in a loss of 152,000, which gets passed along to investors, unfortunately. So yeah, I mean, the companies that are doing property lending, the ones that get the valuations right, it's really essential. It's kind of another disappointing, but not terrible. I mean, the loan was 552,000. If they get their offer for 500, it's not the worst result in the world. But again, anytime capital losses are there for lenders, it's a shame. Funding Secure has been just not a great story for peer-to-peer lenders. I don't think we're going to see any other of those types of failures. Just my personal opinion. I think that you've seen the end of that probably, at least on companies now that are active and in business, but we'll see. Again, that's hopeful opinion. So we've seen an announcement. Zopa is taking applications for a credit card this week. If you want to score yourself a Zopa card, you can. You can pay up to 34% interest, and they offer a 56-day 0% interest-free purchase. What struck me about that is the offer is really weak. If you look at other credit card offers out there, there are some companies that do 20, 22 months of interest-free transfer when you transfer your money from one credit card to another. And I thought, well, Zopa is a new company and they're trying to build up their business. I just thought it was a really weak offer. There was a news story this week about the Bank of England's Governor Andrew Bailey talking about Bitcoin, saying that he didn't think Bitcoin was a good coin to have. He said Bitcoin may have extrinsic value. You may like to collect them, for instance. I mean, collect them? That's weird. But as such, they are a highly risky investment opportunity. I think that just shows the disconnect between government and cryptocurrency. The governments just don't want people to own cryptocurrency because they can't control it. They don't control it. So it doesn't surprise me again to see this massive disconnect of and a massive misunderstanding of cryptocurrency and the government. They just don't understand it. So yeah, I mean, he's right. Bitcoin basically is very volatile at the moment, but it's not always going to be like that. It's still very young, and I think it's something that is worth having some stake in a investment portfolio. He basically thinks that Bitcoin isn't you're just not going to be able to pay for anything with it because it's so volatile, and he sees it purely as an investment, like a risky investment. I used to think that way too until I did more research about cryptocurrency and what it's going to be used for in the future. Bitcoin was never designed to be an investment coin. So, and I think eventually it will balance out not to become something that people trade in volatile situations, but time will tell. We're looking at a 10-year, I think, time span of where we see what really happens to the coin. He said that he didn't mind stable coins though. So if you can find a coin that's stable. What do we got? We're at 34 minutes. I will get to your comments in a few minutes. I thought this story was really funny. The FCA urged to ban peer-to-peer access accounts. When I read that, I was like, expecting for some, the FCA was making some power move to ban peer-to-peer access accounts, and then basically the story said one industry figure is calling for this. Teresa Burton, ex-executive from Trillion Fund. I don't even know what Trillion Fund is. I know it was a failed peer-to-peer lending company. But Mrs. Burton, whoever you are, she's urging the FCA to ban peer-to-peer access accounts. So I don't know what type of power she has. I do agree with one thing about what she's pushing for, and the word access can be extremely misleading for people that don't know better, who are very uninformed investors. You start using the word access and you don't really explain what that means. So, because in peer-to-peer lending, none of the access accounts are really access accounts. They're access accounts under normal market conditions, to where, there's liquidity in a market, but when liquidity dries up, then those access accounts are not accessible anymore. So I think what probably Teresa Burton should have been pushing for is a more accurate description of what those accounts really are. There's a lot of really uninformed investors out there in this world, and just people in general. I was told a story today about somebody, I don't know if you ever tried to list anything in a classified ad to sell, but there's a lot of scammers out there. And I hate to point out Nigeria, but a lot of them are in Nigeria. And I was told today about somebody that shipped an iPhone to Nigeria to sell it. And I guess the Nigerians had said, once you've shipped it, send us the shipping confirmation and we'll pay you via PayPal. I mean, an obvious scam. And unfortunately, this person was duped by that. But it led me to know that there are a lot of people out there that are misinformed and just don't really think all that well when it comes to making decisions. So maybe reclassifying the word access account to something else could be better for that sector of the investment economy. I don't know. It's really highly debatable. I think a ban on access accounts is stupid. It's, just way too extreme. And I don't know. Hopefully the FCA doesn't listen to that. Just my opinion. Sorry, Teresa Burton, but I know you were trying to do the good things, but I think you're a little bit off base. If the news story has been represented accurately, which sometimes news stories are not accurately. I don't know if you saw the Funding Circle share price has gone up to 120p. So if you had bought in at 90p, you'd be up 30p right now. I don't know who's buying those shares still, but Funding Circle was starting to go up, which I was surprised about. Still way down from its 400 and something p release amount. So let's see what else. Yeah, talking about rate cuts. Again, if you're looking to exit out of peer-to-peer lending, you really are going to have to stop and think about where do you go with your money. I think I got an email from Ford Bank this week saying they were cutting their rates from 1% down to 0.6. I fully expect to get another email in a couple of weeks saying that rate's being cut to 0.3 or somewhere in that range. So if you take your money out of peer-to-peer lending, you really have to look at what are the alternatives. Your saving rates are low. You could put it in the stock market into dividend stocks, or even take an index tracker in the income form versus the accumulation. The US, I think, pays about 1.75%. And then you've got volatility issues that yesterday the markets were down, today they're down. So you have no stability in those stock prices. And then, one of the other options that I often get emailed about is, what about corporate bonds? I mean, I'm not a big fan of corporate bonds. I think if you have a bond, tracker that has some corporate bond mixes in there, maybe like 10 or 15% is okay. But if you've seen what's happened in the last few months, there's a lot of companies, corporations that have gone out of bankrupt. I was looking at this list today of shops that have gone out of business this year, and you got Debenhams, Beals, Carphone Warehouse, you had the airline Flybe, Laura Ashley, Mothercare, Harvey's Furniture, Benson's for Beds, Go Outdoors, Monsoon, Victoria's Secret. Yeah, imagine that in the UK has gone out of business. And Cath Kidston, the hardest name to say for me. Cath Kidston also gone out of business in their retail division. Not saying corporate bonds are not always made up of companies like that, but they do. Those funds do have corporate bonds from retailers, and there's some risk involved in the corporate bond side of things. So if you're exiting out of your peer-to-peer investments thinking, well, Loanpad's only paying 3% from December, and Assets Capital's paying 3.75% target rate, it doesn't sound high, but when you look at what the alternatives are, you really have to think about, where am I going to put that money? Am I going to put it in NS&I 1%, which, by the way, I think that will probably drop, not look so great. So quite a big question is, where do investors go for yield now? Even some of the dividends are being cut by the companies on the stock market, and you have some risk involved on that side. Usually when dividends are high, you're not going to get very much growth in those companies for long term. So that's why I'm not so quick to run for the exits in all of my peer-to-peer lending investments. Some of them I definitely am more watchful of than others, but stock market's tough because you start buying. I think I bought some. I bought a week ago, and then yesterday everything started to drop backwards, and you think, well, timing's impossible, but where do you put the money? I don't like the idea of it sitting in a savings account. Inflation is about 1%. So if you're getting 0.5% in a savings account, you're basically losing 0.5% on the value of your money every year. And yeah, there is some safety, implied safety there, but if you are more of a risk taker, then do you really need to have a ton of money in savings? I don't think so. Depends on what your time frame is. If you're 80 years old and you're retired, you need access to that money, you don't need it falling a lot in that risk, then yes, probably having a more padded savings rate amount for you is good. But somebody who's younger, it really makes no sense to have a lot of money sitting in savings when the rates are basically nothing and inflation is low. I think it's okay to take a risk as long as you diversify and you know what you're getting yourself into, you know what you're investing in. Anyway, let's take a look at your comments. If you have any questions, fears, fun facts, put them in the stream comments. I will see what's going on. Chica Boy says, do not fly. It's too dangerous. Wait for the vaccine. Your life will be at risk if you travel now. Listen, don't hate me. I will not be putting that vaccine in my body even when it comes out. I don't know what's inside those vaccines, and I'm a bit of a scaredy cat. Number one, I don't like needles anyways, but I'm not going to be putting a vaccine in my body. Everybody else can do it. I know that's a little short-sighted, but it's just my opinion. Norman says, sadly, not much happening with Landy, whereas my money. Norman, I think you're just going to have to be patient. There is not much action this week, last couple of weeks. Dale says he can't help but wonder if Assets Capital may regret introducing the secondary market. Market is very shallow and subject to shocks, yet discount rates will strongly inform investor confidence in the company. Yeah, I understand what you're saying, Dale, but I think that any time a company gives liquidity options to their investors, it's a really good thing. And I'm sure they thought about investor confidence, but I think it's a great thing. If somebody needs to get access to their money and they're willing to take a 10% discount, then that's a good option for them to have. And not everybody's exiting out of their accounts. If what they say is true and only 2% of investors have sold out at a discount, that means that 98% haven't and are probably not even paying attention to that discount rate. They probably don't even know what that rate is because they've never used it. So I don't think they'll regret it. We'll see. Mark says, "Hi Mark, nice to see you, Mark Mason. Starling Bank now charging minus 0.5% on large euro deposits." Yeah, so what that means is now negative interest rates that you are literally paying the bank to store your money for you. Pretty interesting. I mean, don't know why you would. Better to stick it under your mattress. Hi, Paul New. Nice to see you. Mike Powell says HNW are a property platform with skin in the game. Aki Lawrence is ashamed of his CDs. He's hidden it behind the instruments. No, I haven't. I'll tell you why. I know you're always looking at what I got in the back. So it's a seat. And I didn't have enough room for the instruments, so I put the seat up there. It's a seat from my motorcycle that I took off. I was taking some pictures of it yesterday and just left it up there. I thought it would be a little interesting backdrop for the stream. So it's called a Solo Springer seat for anybody that rides bikes. It's kind of an old school looking motorcycle seat. Mike says he would suspect that HNW won't be the only platform where this happens. The Fca Regulatory Changes in December 19th put requirements on platforms that many don't appear to meet. FCA now is getting around to checking compliance. Yeah, it's about time they did something positive. Paul Bagwell says, "I kind of feel peer-to-peer is slowly disappearing. I have been in it since Zopa launched way back. It's not good at the moment. Losing my optimism with it, sadly." Yeah, I think, Paul, what's happening is a contraction of the industry, and you're going to have a much smaller amount of good companies, and the rest of them will just sort of fade off into the background. And I think that's probably true of any new sector, especially something that's very innovative and different. You're going to have a lot of startups, and then some of those startups are going to fail. And then you'll have the longevity of the good companies, which will shine, especially during times of economic difficulties. I think we had to have an economic downturn to see, who was going to be a good company and who was going to fade out into the darkness. And that's what COVID did. It presented that opportunity for the companies to step up and show how well placed they were. I'm not as pessimistic about it, but I have probably investments through 15, maybe 17 platforms at the moment. And if I was peer-to-peer lending today, I could see that number being more like probably 6 or 7, maybe 8. And Cheeky Boy says he's just trying to get his money out. He doesn't care about interest. He just cares about the platform failing. Fair enough. You have to remember that when you go through an economic downturn, especially one that's very severe, that's where you see the risk in your investment. And that's why you get paid an interest rate. It's unfortunate, but that's what happens. Mark Mason says Fidelity asked the SEC permission to launch crypto fund based on Bitcoin to be known as the Wise Origin Bitcoin Index Fund. Yeah, I did read about that. I didn't read too much, into it, but I think that's going to be something that will become quite common. And I think that those funds will be pretty volatile up and down. There are already funds in the US that do crypto tracking. I don't know that I would put a lot of money into a crypto index fund. I'd rather just own the coin itself and take my chances, but certainly wouldn't put a lot of money into an index fund that tracked crypto, just because there's too many coins that I wouldn't want to own that might be inside of that index. Annabelle says, agree regarding alternatives being so slim. Best Lloyd's can give me as a Royal Banking customer in my savings account is 0.01%. Yep. Better than minus 0.5%, because then you have to pay Lloyd's to have them store your money for you. Chica Boy says, never do corporate bonds. You will lose your money fast. I don't agree with that. I mean, you can do corporate bonds, but you just have to understand there's risk that comes with it. And companies like Apple sell corporate bonds, and I don't think you're going to be at risk of losing your money in an Apple bond, but there is also that chance that Apple doesn't do well and something happens to the company. Probably unlikely, but it could happen. Paul New said NS&I at 1.1%. Yes, today it is, but I don't think that you're going to continue to see NS&I at those types of rates. I think you'll see them drop. Paul says, when drip feeding index trackers, is there a best time? No, absolutely not. There is, you just invest when you have the money. There's some interesting articles out there about, whether it's best if you have a chunk of money to invest all at once or to drip feed. And some studies show that investing at once, if you leave it alone, is the best way. And other ones, studies have said drip feeding is best. But it's the thing about investing in the stock market, it's so time dependent. It's like gold, right? People have said, well, gold's a great investment. And my argument is, yeah, well, it wasn't if you invested in the 1980s when gold was $2,000 an ounce, and it was just starting to touch $2,000 again this month. So if you'd been a gold investor and an investor at the wrong time, you'd have seen zero returns for 20 years. So again, buying in the stock market, highly dependent on time. If you're trying to time it, I think it's impossible. So I just put the money in and leave it. Anytime I've tried to time the market, I've got it extremely wrong. I've never been on the good side of market timing. Usually I'll buy a stock and the next day it'll go down like 6%. Paul says Premier Bonds yields 2% for me. Lucky, I suppose. Yeah, that is lucky. Dave Dawson, Legal and General shares are offering an 8% dividend. Currently, in my opinion, a bargain. I have a shed full. Yeah. Don't know. I've never invested in Legal and General. I know they pay my mother a pension every month. Dale says, sounds like Ratesetter have acted very well from an investor's point of view. If their rates were higher, I would consider investing with them over the others. I don't think you're going to be able to invest with Ratesetter for a long time, Dale. Just my opinion, but I think they will close their retail peer-to-peer doors. I think they'll still do lending, but Metro Bank will eventually take it over. Hi, Heen. Nice to see you. Bill's in Worthing, where I live, closed and split up into smaller units, which are now independent shops, which is good to see. Yeah, that's nice. I like that. Chica Boy. Vaccines have saved millions of lives over the years. Yeah, I mean, not to get into the politics of vaccinations, but from what I've seen, cancer rates have been very high and continuing to rise. And I often wonder, is that a side effect from all the vaccinations that we have been subject to over the last 50 years? I don't know the answer to that question. I don't think anybody else does either, but it's at least something to think about. Alan says assets haven't funded a new loan for a very long time. My probably thoughts on that is right now they are trying to push their CBILS lending forward, but I don't know. Dave said, I think Ratesetter are doing well too, though putting fresh money in Loanpad and Cufflink. Annabelle says, use your bike seat as a phone rest. Yeah, I could. Dave said, I made a load of money on corporate bonds a long time ago when they were paying 15%. Sold them all now. Agreed. Again, that comes down to, I think, David, if I remember correctly, you're a financial advisor at one point, so you're pretty knowledgeable about that, and timing at the right time, very important when it comes to those types of investing. Knowing when to get in and out is very difficult. Anyway, it's 56 minutes. Always trying, there's a goal to keep it under an hour, so I think that we'll wrap it up this week. Again, thank you for joining. Please hit that thumbs up button and subscribe to the channel if you haven't already. A little bit of news at the end, by the way. Since I have a new computer now, I have the ability to bring on guests on the stream, and I've managed to talk my first guest into committing to be a guest here. I won't tell you who it is just yet until I have everything 100% confirmed, but we'll be bringing on hopefully members of the peer-to-peer lending community, business owners, hopefully the people running or who are in charge of some of the peer-to-peer lending companies that you invest through. That's my goal, to have them on here so we can grill them. I mean, ask some questions and just bring you more in-depth information. So I'm really super excited about that. But thank you again for coming onto the stream and to spending your time with me, nattering on about investing. And again, we'll be back next week on Thursday. I appreciate it. You guys have a great weekend, and I will see you next week. Take care. Enjoy your hobnobs and your tea. Take care. Bye.